Liquidity through people and machines. I'm Kevin McParland, and I'll be your moderator today. A little background on Greenwich Associates, if you're not familiar. We are a research, data, and analytics firm examining global financial markets. We speak with over 60,000 market participants annually to get a better understanding both of what's happening in the market today and what is likely to come going forward. Before we get started with today's discussion, just a couple of admin items. Questions are definitely welcome and encouraged, in fact. So please type them in the question box in the GoToWebinar interface, and we'll answer as many of them as we can. We will keep an eye on them throughout the webinar, and if not, then we'll try to answer them at the end. After the event, you will be asked to participate in a brief survey. We do look at what you say, so please do take the 2 minutes it will take to fill that out and let us know what you liked and what you'd like us to do differently next time. And finally, we are recording the webinar, and a link will be distributed to all attendees after the fact. Usually takes us about a day or two, but keep an eye out for that. We have an awesome panel put together for this morning. We're really excited to have all these folks here. Brad Levy, who's the president and CCO of Symphony. Lou Rosado, who is the director in investment operations, global business strategy at BlackRock. And Marianne Richter, who's an executive director in the electronic trading strategy team at Morgan Stanley. So excited to have you all here. So with that introduction, let's get to it. So I think it's probably a good place to start to define some terms, right? We're going to be talking a lot about digitization and electronification and automation and all of these fun things that we talk about a lot these days. But I think from our sort of conversations earlier, it's clear that maybe there's a few different ways to define those terms. So Marianne, maybe we'll start off with you. Can we take a look at sort of how Morgan Stanley defines those terms, or what the terms are for that matter, and how you think about technology and electronification in the markets in general?
Sure, Kevin. So fundamentally, we're really talking about evolving our whole trading operation from an analog, manual process to a more digital process. And so a lot of the terms that we use include electronification, systematic trading, automated trading, and digitization. So I kind of thought I would break it up and kind of start with some definitions. So first, as electronic trading, we kind of think of electronic trading in two ways. One is, how is a bond priced? And then what is the channel of execution? I think that, predominantly, in fixed income, electronic trading really means RFQ, where a human is raising an RFQ to another human. We definitely have seen a lot of evolution in that space through the introduction of algos. And so for electronic trading, we kind of think that pricing is either, created by a human or created by an algo, or we have a channel, which is either a voice channel or an electronic channel using a venue, a third-party platform. A majority of our volume is, traded over voice, human-to-human interaction. But we are starting to see, a big increase, as Kevin, you've mentioned in a lot of your pieces, in the electronification, not only in terms of size, but also ticket count. Now I'll turn to systematic and automated trading, and I think we can kind of, use those terms interchangeably. For us, systematic really means we have an algorithm that, creates bond pricing. So, for example, in our investment grade and high yield algo in the U.S., we have, a capability to price 12,000 CUSIPs. In our European business, we can price, 4,300 CUSIPs in an automated fashion. And then we also have the ability to systematically respond to RFQs. So, I think that so that's kind of like the overall definition as we see it. But we also see humans that interact with these automated pricing. For example, when we have a portfolio trade that comes in via voice, from a client, we have, the ability to price that portfolio systematically through our algo. And we also have the ability for humans to come in and augment those prices depending on size, liquidity, et cetera. And so we kind of join systematic and algo together with our humans in order to create more liquidity for our clients. Lastly, I would say that there are instances where, an algo can price suggest to a trader. So it's a little bit of a hybrid again, where you have a machine that suggests the price, and then a trader, depending on what he or she is seeing in the marketplace, can adjust those prices accordingly when responding to an electronic RFQ. So lastly, digitization. So for us, digitization is really about automating the pipe where we are able to exchange between the sell side and the buy side, pre-trade to post-trade data and analytics, across a common channel that is not an email or not a chat. And so we're really working on, creating technology for more of our voice business to use a more digital way to transfer information between ourselves and our clients. At the end of the day, all of these advances in technologies are really helping humans to provide more liquidity to our clients and really making all market participants more efficient. And the more efficient market participants are, we assume that will, increase liquidity throughout the whole entire system for all market participants.
Sure, right. And in the end, that's what it's about. I mean, Brad, I've heard you talk a lot about digitization, which in some ways sounds like it's just a buzzy term, but obviously it's not. It has a real meaning and it is different from electronic trading. So what's your thinking there from your past? And then obviously as you're really getting going at Symphony.
Yeah, thanks, Kevin. And Marianne, thanks for that frame. It's a great one. So, and I'll take a little bit more of a people-centric approach, as Symphony is a network of people doing work. So just to start, electronic is where it really is, I would say, more technology-led, where the role of maybe the humans is a little bit more about maybe some oversight or some risk controls. Digitalization or digital does really mean a lot going on in the back in the pipes, but I also believe it's how you frame these workflows and processes where humans could come in and out very elegantly versus having to search and looking at the world of more electronic versus human is fairly separate, and it's more that blend. As you look to systemic, and to me, this is where you really start to take the algos and put them in place. And to Marianne's point, it's very rare that any one of these areas is going to be the answer for anyone. It's more of a continuum of solutions and even a blend of these solutions and a lot of hybrid approaches. But when you think about making something more systemic or systematic, I guess it's systematic. The algos are either the thing that's doing it or augmenting the human that's doing it. And then to me, automated is that idea where electronic really becomes really super low or no touch, and the digital really begins to scale, and the humans can really come in and out of that process in an extremely elegant, if not completely unaware way, where you're really being drawn forward and backward without really having to push the process yourself. You're more being pulled by gravity into it. So, Symphony is very active in looking at these different workflows in the marketplace, in the liquidity space in particular, and we're trying to take I think a little bit more of a human-centric approach. And while electronification, hyper automation is definitely part of the markets, we're probably the other end of the spectrum, where we're trying to really give humans that leverage sitting in the middle of these complicated flows driven by technology.
Sure. Yeah. And I feel like the last 20 years have, definitely proven that even as markets have automated, even the most electronic markets, maybe the people and the skills of those people are different, but there still certainly are people driving in general. Lou, obviously BlackRock known for its technology, and from your seat, right, this is more than trading, right? This is a front to back sort of thought process about how we can make things more efficient, right?
Yeah, exactly. And I think I'll echo some of what both Marianne and Brad spoke to, but the use of technology, as we're digitizing our workflow, it's really the closer integration of all the activity through an investment lifecycle, as you pointed out, Kevin. So we look at the opportunity is really using our platform and technology to take from a full lifecycle point of view, the management of risk, the creation of an investment idea, the implementation and the trade debt idea through to then things that happen post-trade and or through asset searching to finality for us for settlement or clearing. Our Aladdin platform is a fully integrated system allow for that, and we have great dependency on that and driving connectivity to that platform with our counterparties like Marianne, or through using tools like Symphony, other tools to allow us to enhance our technology further in our ecosystem. Okay, so I would summarize really for us, it's the closer integration of that activity from a full life cycle and in partnership and connectivity to our core platform and interoperability to that platform with our brokers, clearing brokers, prime brokers, custodians, the ecosystem. The idea using technology for us is very simple, and we're in a data business. Financial services is a technology business, number one and foremost, and the data available today is unparalleled. It's the way we move that data through life cycle to make better decisions and have the machines help us drive the quality and the availability of that data in real time, to then get the human being back to be using the technology to help frame and use the information to make better decisions. At the end of the day, that's how we'll service our clients more effectively, by focusing on the client, allowing the processing to happen, and then the availability of that information for us to make better, smarter decisions.
Yeah, that makes sense. You're right. It does in the end come back to everybody servicing their respective clients. Marianne, actually, we had a quick question coming for you live. We talked about digitization with email and chat. The question was, are you seeing other channels besides email and chat coming into the equation, or is that really where it's heading now?
So I think that one of the major trends that we're really seeing is the concept of bilateral connectivity, where the dealers will connect bilaterally to a client through a direct API, whether it's to feed data or data and execution. So that's a trend that we're seeing. I think it's early days though, but as more buy side and sell side firms become more advanced through technology, I do think that the trend will continue, and I think that it will be very, very interesting to see how that's going to work from a scalability perspective, because I think it will break up the universe of the haves and have-nots, because it's quite resource heavy in order to do this, and just doesn't seem to be a really scalable solution. And so I'm sure that there will be providers that will come out to create an offering to kind of help with the scalability question.
Sure. Great.
Yeah,
if not already. I mean, there definitely are vendors now that are already providing some of those services.
Yeah, and if I could actually, if you think of the phone and email and chat as just ways to communicate somewhat bilaterally or multilaterally at times, what that generates is a tremendous amount of information, to Lou's point, but is fairly unstructured. And how do you then take those channels, create structured information right at the start, and then flow that through downstream more easily? That is, for me, these channels are not necessarily going away as much as going to be funnelized into structured information that could then be automated downstream and then even pushed back upstream into those same channels more elegantly than all the context switching that goes on today.
Now, it's an interesting point, right? It's about making it easier for the user with your phone and your email and your chat, maybe all in one system, but then also being able to use all of the information that you get and give through those three channels. There you go.
Yeah, it's like your private life, but it will apply to the corporate and institutional world as well.
Yeah, institutional seems to be a couple of years behind private, ironically, these days.
Yeah, maybe a decade.
Yeah, fair enough. So the blending of people and machines makes me think about the more complex, less liquid products that for years people have said, oh, that there's no electronic trading there. It's too complicated. It's too bespoke. There's not enough turnover. We had that conversation, I felt like 15 years ago, about corporate bonds, and look where we are today with there. So, I mean, Brad, from your perspective and conversations you've been having with clients, what asset classes or products do you see starting to move forward sort of in this new gray area of digitization in terms of sort of trading and downstream processing?
Yeah, so Lou alluded to it. There's always, as we commoditize the past, we complexify the forward a bit, and there's usually almost always a place for this sort of manual analog or maybe more human-centered digital flows. If you look at the markets broadly, there are literally millions of instruments, securities, millions and millions. There are almost endless structures that you could create in the derivative markets on some level. And fully electronic, highly automated, systematic trading is a very big part of the market and will remain and grow. But there's a very significant part of the market that isn't in that bucket today. Like, for instance, a lot of the securities world, as you move away from the most liquid equities and even corporates, et cetera, there's a very long tail. And certainly as you get into derivatives and, again, endless structures that could be created there, and each time something gets more automated or commoditized, you start to create some complexity on the forward. So whether that's just more complex instruments, more complex trading strategies, multi-legs, or portfolio trading up against, a portfolio that you already have or an index, et cetera, all of these things are happening very much in the world and growing, including ETFs. And that all won't be pure electronic. A lot of it will be somewhat manual. I think most of it will be more digitally driven than maybe pushed into a fairly rigid electronic framework. And the securities world and the credit markets in particular, have maybe quite a bit of that behavior, over the counter, chatty, unstructured. That does digital has a place in that workflow. Keeping humans in the middle and automating what can be automated as you go.
Sure. Yeah, Marianne, Lou, any progress there? I think loans, asset backs, bespoke derivatives, any efficiency coming from technology that you've seen in the last few years?
Okay, Marianne, go first, and I'll come on back to
that. Sure. I think that, in the mortgage space, in securitized products, we're seeing, the use of natural language processing, for example, to go through the thousands and thousands of residential mortgage documents, for example. One example that I have in NLP is in the securitized product space, going through all the documents for LIBOR transition to SOFR, and understanding for each individual deal that we have, what category of LIBOR fallback does each deal fall into. And so we've built a system internally at Morgan Stanley that basically parses through the thousands and thousands of documents, looking for the keywords around LIBOR fallback and categorizing each deal in digestible buckets so traders can really easily understand and see through a GUI kind of where the risk is and how, and when each deal comes up, how to quickly and easily understand without reading thousands of pages how to manage that individual deal as it comes to life, as it comes to the SOFR transition. So those are some use cases that we see. I think there's also talk about taking, IB chat or some kind of a chat platform and being able to translate that into RFQ. I think that that's something that we're starting to hear a little bit about. I haven't seen any progress there, but I'd love to kind of hand it over to you, Brad, to see if Symphony has any thoughts around that.
Yeah, so we do spend a lot of time in what I think of as the broad unstructured data world. Some of that is document heavy, some of that is, coming across different channels like email or chat. So we're definitely in the mode of taking that data and putting more structure to it right at Genesis. In particular, on the transactional side, we have a way to basically transform very natural language chats for information where it's more of a price discovery, into some sort of an RFQ process in the interest rate market and the equity derivative market. So we're again trying to give people the freedom to deal with whom they want, when they want, where they want, but also create an ability to go from a very human kind of oriented process around speaking, into chatting, right through into automations behind it without, having people feel like they're moving around too much and it's not a human process. So we're, our product is Spark, and I'll reflect on some of the other document initiatives around the mortgage example you gave, maybe after Lou comes in.
Yeah, the one there, I hear some common theme here where, and Kevin, going back to your original question, I think we've seen major uptick or increased standardization across asset classes, how we transacted it, starting at that front end full life cycle, where we can execute, and traditionally FIX is an example of electronic trading almost 30 years ago for equity. We've seen that advance to fixed income. That's taken hold, obviously, in the listed derivatives market and the over-the-counter market in terms of allowing the digitization of that front workflow. We've carried that through that asset class kind of flattening to support electronic trading, then carries very evenly into the post-trade and asset servicing. Through the use of the standardized messaging and/or really just continually automating the workflow, or flattening and harmonizing the workflow to be able to confirm a trade or settle a trade across asset class that, traditionally there were variances in how you move from the front to the back or to the final point to settle, right? It's very key to continually flatten how we can transact across asset classes, across the different regions or the variances. As it relates to really then back to originally our mandate to manage money for our clients, it's almost a 24/7 market today to be able to transact across asset class. across regions, and the different business channels to support, why we manage money for those clients. And so when we see the technology beginning to be applied evenly across those variances, then we see a major uptick in the quality of data moving through the life cycle. And I think that's a key simple thing that's taken hold over time, but it's more prominent now as a greater opportunity.
Yeah, and it can't be ignored that it feels like a lot of that has been accelerated over the last 9 months of 2020, right? Where effectively everybody is in a different region most of the time, right? Even if it's just between cities in the same state. That's great. So we had another question come in from the audience for Brad, which is a little tangential, but I do think fits to the topic about the impacts of potential impacts, I should say, of smart contracts and distributed ledgers or blockchain and this whole digitization for less liquid products. Do you have any views there, Brad?
Yes, and I'll try to stay within some frame bounds, but I appreciate the question. I do think of Symphony, there's this world of distributed technology that's emerging in a big way. The cloud is the big enabler of that, at least in the last 10 years, but it's much larger than that. It is about blockchain. It is about edge computing and sensors and the IoT and financial form, and I think we may dwell on it a little bit later, but this idea that, leave the data where it is and bring the applications to it, bring it to the user based on what they're trying to do at that moment. So I absolutely think there's a relationship between what we're doing, which is people sitting in their home or at their desk trying to figure out what they're supposed to be doing at any given moment, and this idea of highly protected but distributed data in blockchain that could then be easily automated either by pushing into that data blob or by having that call you in by way of a smart contract automation. So whether it's protecting data at the edge, giving it permission to be seen by only who can see it, or automating those workflows via smart contract technology, I see that as right in the middle of this whole push toward distributed technologies, and I think we're really a cousin to that blockchain world as Symphony.
Yeah, no, you're right. It's probably more related maybe than it seems on the surface. Great. So we've now for the last couple of minutes we've been talking a lot about sort of the data and the technical side. Obviously, there is as we said, a human element. There's a relationship element. I'd love, in some ways, from your own sort of personal seats, with all of the technology, has it hurt relationships? Has it just changed relationships? Again, in the last 9 months, again, another test, right? You're not meeting folks for coffee and drinks anymore, but then on the other hand, in some ways, people are more accessible than ever. But yeah, so would love your thoughts on, the impact of all of this digitization on relationships. I don't know, Marianne, maybe we'll start from you. You do a lot of talking with clients, I'm sure.
Yeah, I think, at the end of the day, our business is a relationship business, and I really don't see the advances in technology really changing that. To Brad's earlier point, before we had the smartphone, we interacted in a very analog way. And now we have the smartphone, but that doesn't make the importance of, meeting our friends and meeting our family face to face, any more or less important. I think, if anything, what the COVID crisis is showing us is that, we really crave that human interaction, and having, technology and tools to be able to kind of do the heavy lifting in terms of analyzing data, and to be able to show you kind of a picture of what's happening with the data that enables you to then pick up the phone and have a really smart conversation, I think is kind of the direction where this is heading. And I think it's about creating workflow efficiencies to automate away the really tedious kind of low touch, low level activities to free up time for the more value added, high touch activities.
Yeah, Kevin, I would then add on that. So what we're trying to use the technology to really reduce the processing aspect of what we do today in the post-trade space or asset servicing. Really to use the technology to do the processing, and then allow the operational professional to become more consultative or service focused in terms of managing our internal relationships and our external clients. Really, at the end of the day, the technology are just tools to allow us to redeploy capacity to focus on our internal and external clients. I would say then, one thing I want to go back to the DLT comment, we see great promise in those types of things, and we are seeing the advancements, real concrete use cases now in production in terms of digitizing further. Equity swaps is a great example. That's taken hold across other asset classes. Again, going back to, there's some opportunity to flatten across asset class and leverage things like DLT, not in just one vertical or one orientation, to move it and capitalize on it further in different ways, whether that be ETD or securities lending as other examples where DLT is starting to take hold. Really, the story is always how we're using this new technology and evolving it with our pre-existing technology so it can converge, and then reach a critical mass at some point in the future to really disrupt and improve what we're doing in new ways via that technology.
It's great. Brett?
Yeah, and I mean, my goal in all of this is to really take the fear out, but that does require knowledge and somewhat embracing of these technologies to then understand them. And to your question on relationships, at a minimum, to me, it changes or scales relationships, but it can really enhance and even leverage relationships. So you just, I think there's just a net good from this. Thomas Friedman, the book, Thank You for Being Late, where he talked about the technology trend, the climate change trend, and the globalization all hitting at the same time and really invoking a ton of fear in humans that are not, it's just overwhelming us. And I think if we just take the view that this is not about automating people out of their jobs, there's elements of that always in the world as we progress and become more productive. But it really, I think maybe the last year and even the last couple of years has gotten people to understand, that it really is a relationship builder potentially, but you have to embrace it. You can't resist fully, although there are some challenges where blockchain has been a Satoshi 11-year thing. It's probably 5 years in to real development in our industry, and it's probably 5 years away from making a huge difference. But that's, for us, no different than the timeline I've seen any of these technologies on. And it's just a matter of embracing, figuring it out, and not believing it's going to solve everything, but at least solve a few things that could be stitched together with other things.
Yeah. I mean, outside of changes that come from regulatory mandate, right? Change, especially in capital markets, takes the better part of a decade, if not more in some cases. Absolutely.
Yeah, and even that took like a decade, by the way. Even the ones catalyzed by regulatory seem to, take a bit longer than anybody.
Fair point, for sure.
It's a great point. The discretionary and non-discretionary pressures are going to only get more rigorous. The technology allows us, I think, Marianne mentioned it earlier, create the scale and the capacity then to redirect our efforts to what Brad just said. Really, it's the focus on the client or the relationships and the partnerships to bring our ecosystem together through that technology. It's redeploying the focus on the people have, using the machines to help them then drive that relationship focus.
Great. Yeah, actually, we just had a question come in like right now as Lou is finishing, which I think maybe Marianne is directed more to you, but are you seeing more in higher or low engagement via phone calls with salespeople? And then are the traders starting to do video calls more, or is it just the rest of us here that sit around the edges?
So I'm kind of away from my salespeople and my traders, so I can't really speak to the level of interactions. But I do think that for the most part, Zooming and having phone calls is definitely on the uptick. Though I haven't personally seen the interactions data because we do actually track all the interactions pretty closely here. I think that what the traders are doing is like speaking to each other via some kind of a Zoom kind of a format. And I think that salespeople have their own bespoke ways of communicating with their clients, whether it's through chat, phone, email, etc. So I think that what seems to be difficult for the buy-side trader, from my understanding, is that they only have one computer with maybe one or two screens with one phone, and they can't speak to everybody and take all the incoming, inquiry from all of the dealers across the street. And so I think that there is a little bit of a challenge here while we're doing the work from home thing. But hopefully it won't be for that much longer.
Yeah, exactly. Cool. So sorry, go ahead.
Kevin, on that point, I personally think while it will fade with maybe the crisis that we're in, but I do think some of these are more here to stay. And people will just be more remote and doing these things. In video, the big challenge is protecting the information, where it's just a tougher when you're looking behind and the blurring of screen. It's a lot tougher to protect information, and we're pretty obsessed with that. And then to Marianne's point, the ability to scale is just more limited when you're on a video, but it is the most personal touch. And if I'm right at all, then the most personal touches will be the most relevant. The phone will continue to be very relevant for a slightly less personal touch, but very. And then the other communications will become, really the way scale happens, but relationships will be built, traditionally, just maybe a bit more virtually.
Sure. And maybe that's a good segue to move to Lou, right? We've talked so much about trading, but obviously there's a lot more from an efficiency perspective. I think of that, we talk about multiple channels of communication. Obviously there's a whole surveillance and compliance element to that as well. That I know the industry's been working through all this year. But yeah, I mean, Lou, maybe you can talk us through some of the other ways that BlackRock uses the technology, everything from risk to corporate actions, right? There's a whole long list of different areas outside of trading, yeah?
Yeah, it's a great point. Our LAD platform is our internal workflow system, and it starts with risk and moves to the investment creation to then implementing those ideas and trading them through that final point to be accounted for in our client portfolio. The linkage of all that activity is really key, because really it's not a story about one vertical within that workflow, really how those horizontal things are connected, and the quality of data and the availability of that data in real time, Kevin, is really improving the investment decision making and risk management that is happening up front. Our investments are interconnected around the globe, and if we can trade a future electronically, and now we can trade a equity swap electronically, those portfolios that manage or invest in those asset classes, as an example, they may be different teams around the globe creating risk or managing risk and creating the investment idea and implementing it. But really, it's one whole portfolio that captures all that information, and that information is critical to have at the earliest point to make decisions. Okay, so the linkage is always there. The way we continually connect the workflow and further integrate it, and then flatten out hopefully what we do operationally, so that the amount of redundant reconciliations that happen today to bring the quality of the data up really actually move upstream, and we're spending less time reconciling, and we're spending more time upstream in the workflow to bring that quality up, to allow traders to do what they do very well today, in all the ways they're applying technology that we're kind of replicating further downstream.
So there's also some opportunity for it all to help ultimately improve alpha, right, from the buy side's perspective, yeah?
We look at ops alpha as being able to make a portfolio manager has a position and cash available in the portfolio, and that information is maintained accurately in real time to our ecosystem, whether that's a clearing broker, executing broker. Their data matches our data, the clearing broker, the prime broker, and the custodian that warehouse those assets. When we have the connectivity and the quality data improved, that allows portfolio managers to do what they get paid to do more effectively, and sure, naturally traders then through to where we sit. We want ops to automate to a point where we're actually more service-oriented and not production-oriented or processing-oriented. And really, that's our front-end client and the portfolio management and trading teams that are benefiting from, hopefully, from us creating some level of ops alpha.
Sure. And yeah, Brad, I mean, I remember from the early days of Symphony, right, that there was a lot of talk of what sort of, there's more not traders than traders on Wall Street, right, and they all need to communicate as well, yeah.
Yeah, so the way we think about it, there are two spheres of client lifecycle and transaction lifecycle management. I'm personally trying to move away from the term STP, but it both implies linear and siloed, which I think are both not helpful. And it's a great term from 20 years ago, but to me, the terms I'm trying to really push are more digital trade processing and digital client processing, where it's this idea of two spheres that interact. You onboard a client, you go through that cleanly, you do a transaction. On day 3, that client transforms themselves somehow, and you have to reassess them as a client, and then you're also doing trades in real time with them. So that whole world of Lou Rosado that sits sort of at the bottom of that funnel should be coming right back to the top as a transaction world, and also should be much tighter with the client lifecycle side, because they're very, there's a clear overlap there. We don't run them that way. Our systems are fairly separate, And it's not to say that you have to build one giant system to do all this. They just have to be aware and then able to interact with each other. And that could be people to apps, bots to bots, apps to apps. Like there's many different combinations of interacting. But once we can understand these flows and they're digital to some degree, futures and swaps can actually relate to each other in workflow as opposed to only at the risk or post-trade level.
And is this Brad, is this a data challenge or a software challenge? And has that mix changed, do you think, over the last 10 years or so?
Yeah, for sure. And it's definitely a data challenge. I think the software side is always a challenge, and nobody likes to talk versioning and features and argue about roadmaps. That's certainly a feature of my life, and I'm sure most of yours. But the reality is the applications are getting smaller and simpler and commoditized, and the data is getting bigger and more complex and even more risky to move around. I would argue what digitization does is allow you to increase your alpha and either know or reduce your beta. And that's the balance I think that we can achieve. And it's all going to be, in my opinion, about leaving data where it is and then going by appointment away from that and putting the applications near that data. Whereas historically, 20 years ago, we had apps and we put data in it. 10 years ago, the cloud comes or so. And now it does seem like we're going to be really moving applications around. I could even argue applications are going to be fairly temporary and sort of get spun up and extinguished by task versus these persistent things that you actually need to upgrade constantly. That's a little out there, 5 or 10 years, but it does. Self-healing will be first.
We'll talk about that in 2021.
There's another problem, right? It's the language we speak today. Ideally, we'd have one common language in the financial services industry, but in reality, our systems, our applications speak different languages. And so it's the lack of that common language sometimes that creates a problem. I'll put a plug out there for BlackRock has a podcast called The Bid. Rob Goldstein did the first episode, and he talks about the promise of fintech. That was the title of the episode, but really gets into very quickly on the bigger problem we have today in moving data through the life cycle is really that lack of a common language. And how does that technology help us solve that? And or our core platforms, our proprietary platforms for BlackRock Aladdin, capture that and speak one way, but then translate it to move it to Marianne, to a broker, or to a custodian, where there isn't a common language today, whether that be FIX or SWIFT or FPML or JSON. Those things are not entirely compatible today, but that's the goal. Get them compatible. At least allow for the state sets in them to be translated. Go ahead, Brad. Sorry.
No, it may start at the human level. Like I would argue futures people, repo people, swaps people actually speak a pretty different language as people. And that translates down into the standards, that sit below like FPML, FIX. People. Yeah, the technology can help those translations, but it is a people problem, maybe even at the core, our language. Ops people versus front office people, like there's a lot of translation that needs to go on when you say tri-party. Does that mean anything to people? Well, it does to repo.
Right. I felt like one of the other things we learned through the other financial crisis in Dodd-Frank, right, was the talk of let's move swaps to futures markets, and then suddenly we realized the swaps people and the futures people, to your point, do not talk the same language, and probably still don't.
And then Seth became an adjective, a noun, and a verb, like in 12 months.
Exactly. Marianne, I've seen a lot of nodding there. If you want to.
I was just going to say, Kevin, on Dodd-Frank issue, one subset can get to certainty of clearing and trade matched and cleared into the market more effectively than a more mature market where there's deep liquidity, but yet the operational infrastructure hasn't caught up with that give-up workflows in that listed market. So I think, it's a key point you guys just made there.
Marianne, why don't you jump in?
Sure. One point I wanted to make as I was making my rounds with my quants as I was preparing for this, the one thing that we talked about was around machine learning and AI, and that's, these buzzwords have been flying around, and it seems like there hasn't been, as much uptake in the traditional sense. But I think the one point I wanted to make is that, at Morgan Stanley, we're really seeing, a lot of talk about, machine learning and AI to solve these business problems. But actually what underlies the problem is really bad data or uncleansed data or unstructured data in a way that's easily, accessible. Operational workflows, they're really, really, clunky and cumbersome, as well as like legacy systems, front to back systems that are, embedded in the workflow, really hard to lift out, have been around for ages and ages. And so I think there's, a lot of misconception that machine learning and AI is going to be this magic bullet that's going to solve all these problems. But at the end of the day, having, inaccessible data, however large it may be, is definitely a hindrance. And I don't know that, ML and AI are actually going to actually solve those problems. So I just wanted to make that point.
Yeah, the old garbage in, garbage out still very much applies, maybe even more so now than ever, since we're so data driven.
Yeah, and if you throw
but OCR, I think that sorry, go ahead, Brad.
There's tool sets, right, that lead there. There's OCR, voice to text or phone to text, and then NLP, which then go into the ML, deterministic models, or the AI, probabilistic. But it is that data cleansing and organization up front that the models need to actually be effective at all.
I also think that the more structured, as we continue down this, evolution, this is not going to be a revolution. This is an evolution. As we continue through the evolution, and the data becomes a lot more structured, then we're going to have the ability to apply AI and ML in a much more robust way, because you'll have, structured data sets that then the machines and the algos can then do something with. So I think that as we continue down this path, I think that we'll see a lot more uptake on, machine learning and AI as the robustness of the structured data becomes more readily available.
And maybe we'll know what. Go ahead, Luke.
Oh, sorry, I was just going to say, I think we're already seeing the application. Those different technologies are being applied today. We're spending a lot of time talking in this conversation about the processing and the platform, or the ability to move information through a technology platform. But most of what we're talking about, Marianne just highlighted, I think, very nicely, is that these are tools to allow people to then further innovate and reinvent the process, whether it's from the front end to the back, and evolve the platforms to be more robust in terms of how we can then transact together. And you're back to, again, the people focus is obviously driving a lot of this, and the tools are allowing for that to accelerate, in very creative ways. To Kevin, to get back to the other point, right? To bring the higher level of quality of data and its availability up to make better decisions, right?
So is there, it's kind of a loaded question, but is there an obvious formula to figure out where people should be involved and where we should spend more energy to make sure we automate it as much as we can and get the people out? The answer is no.
I think if you just took the technology part of the conversation and put it on cyber typing and make it a talent and a people conversation, it's really giving it's one, building the culture to allow for innovation, and actually most of what we're talking about leads to technology being applied or enhanced. And there's a lot of tools today to make available. So it's allowing those tools to make their way into the full life cycle. So traders today that manage liquidity and can get best execution are now benefiting from learning some engineering skills to apply within their role and their subject matter expertise to use technology to enhance the human capability to make better decisions, right? So there's a reformatting, a retraining, a continuous evolution of bringing the talent up to be focused on using these tools and applying them in ways they may not have been traditionally where they fit into the ecosystem or the full life cycle of things.
Yeah, I mean, we're just about out of time. So just to, so what I think I'm hearing, right, is that there are certain things that you can't try to change everything, right? So you can't change human nature. There's always going to be these, as you pointed out, fix and sweat. Like there's always going to be these sort of different languages, different parts of the world talk, or different markets have their different market structures for a reason. So there are some things that we need to accept, but obviously we also should continuously try to figure out how to improve and make them all efficient, all talk with one another, which is why clearly this conversation is happening and why this is so complex. Right. So, I mean, if we try to think ahead to next year, the way you always have to end every good webinar, right, is if we start to think ahead to next year, like what do we think will be the focus? Are we going to get back to a more sort of standard, like let's move the market forward, market structure, technology sort of advancement, or are we still going to be bogged down and just trying to keep markets stable? I don't know, Brad, why don't we start with you, and then we'll sort of make the rounds to wrap it up.
Yeah, stability is maybe in the hands of the gods in terms of market volatility, or maybe the Fed. So we'll see how 21 goes on that front. But I do think, what's getting more complex for people is this idea that you just have to think about a much broader set of technologies now than you did 20 years ago. It was deeper and more engineering 20 years ago, but now there's so many different options. I would even argue consumer apps are much more relevant to us than they ever have been in our industry. We've seen that in the pandemic. I don't think it's going away. And it's not as much the app as the simplicity of the apps. And the reason, Marianne, it's an evolution is because it's not one thing that's going to change everything. It's a lot of things that are going to combine to change a lot. And it's that incrementalism, the simplicity of the consumer application space that's likely more to blend with what we've done traditionally in this heavy institutional world. And that to me is the game of 21, is to figure out the right spots to take that lighter approach, faster, more modern consumer versus the heavy sort of approach that we've typically taken as an industry infrastructure.
Great. Lou?
Yeah, I mean, I think back in March, the response, the immediate stabilization, then the focus on Thrive got reaccelerated. I think we'll see that even move more quickly next year. I mean, the resiliency is still a concern, and we're going to need to constantly work on that to maintain stability and performance in all that we operate, whether it's through technology and our human interactions. But we're hoping next year the acceleration of this way of working will allow for us to, at some point, get back, again, safety being the foremost thing, but get back to having people come together to interact. It's, the new normal is going to be shifting again, I think, longer term next year and further out, to take what we learned here and modify that, and not lose the fact that people coming together are really important, and that the technology advancements we've seen when we stabilized, or the proof of our platforms actually being resilient and allowing for this way of working, now can bring us back to accelerate to some point getting people back together and being safe to that idea of coming together and innovating really needs to continue to accelerate. And it won't happen just through technology. It'll be humans and technology coming together, like this panel's meant to describe and talk about.
Great. Well said, Lou. And Marianne, to wrap us up.
So on our side, I think that we in 2020 have been working on creating new products off the back of the advances in technology that we've seen around the systematic trading. And also, we think that we'll be able to apply the lessons and the technology that we've created in certain asset classes and apply them to other asset classes, and see if we can tweak and change, create some incremental change in workflow efficiency in terms of trading. So I think we'll be able to introduce some new product functionality for our clients in 2021.
That's fantastic.
And hopefully see them in person to be able to talk about it and see how, what the different use cases are and the problems that we can help solve for them.
Yes, let's hope Brad can welcome everybody to Symphony Innovate in person next fall, and then we can all hang out there. Great. Well, this has been awesome. Thanks, guys. Thanks for the great conversation. I loved it. It was nice and lively. To the audience, thanks for all the great questions. We got way more than we could handle. We will circulate them to this group via email after the fact, so we'll try to get back to you all. But we really appreciate the interaction. So with that, thanks again to the panel. Thanks to the audience. Please do take the 2 minutes to fill out that survey that'll pop up when you hit exit. And yeah, thanks everybody for being here. Have a great rest of the day. All right.
Thanks, Kevin. Thanks, guys. Appreciate it.
Thanks, Kevin.